Thomas from Curvo. So you may have seen the term ETF shared online and in the press. They're becoming increasingly popular, and with good reasons. So at Curvo, we strongly believe that passive investing or investing in ETFs and index funds is the best way for the majority of people to save for their future. But how do we actually invest in ETFs from Belgium? That's the question that we're answering here today in this video. So an ETF is a collection of tens, hundreds, or sometimes thousands of stocks or bonds. This spreading is one of the most attractive aspects of owning an ETF compared to individual stocks and bonds. So by investing in one single ETF, you become invested in thousands of companies in one go. And so ETFs are really a sound investment decision for the following reasons. They're best suited for the long term, so investments in ETFs compound to substantial returns over many years, and research shows that it consistently beats active investing. Secondly, diversification. You're exposed to thousands of companies in one go through one single fund, and diversification is key to good investing. Secondly, simplicity. So once you've selected the right funds to invest in, you can just sit back and watch your investments grow. There's no need to spend time analyzing individual stock performance. Thirdly, it's cost effective. Partly due to the economies of scale and the lack of active management costs, ETF are really a cheap and a great way of investing. So how do we actually invest in ETFs from Belgium? As a Belgian investor, there are two ways of investing in ETFs. Firstly, by managing your own investments through a broker, and the second way is using an investment app like Curvo. So considering there are thousands of ETFs to choose from, how do we actually know which one we should buy? So Belgian taxes and regulations impact which ones are advantageous and which you should avoid if possible. So in short, you should always pay attention to the distribution of dividends. So accumulating funds preferred over distributing funds for tax reasons. Secondly, the domicile. So Luxembourg and Ireland, they have special tax treaties with other countries, and that reduces the taxes the funds themselves have to pay for the stocks that they hold. Thirdly, the size. So a larger fund is actually less likely to shut down. And fourth is replication. So synthetic funds can be cheaper, but they do come with an additional risk. And the last one is really the cost. So a lower total expense ratio, the better. So to really dive deeper into that criteria, and I really recommend that you look at our considerations to take into account when investing in ETFs as a Belgian investor. I'm going to put up a little infographic there, but I also put it into the show note. So to show you how to buy an ETF, we're going to assume that we want to buy the VWCE ETF. So VWCE is a ticker symbol for Vanguard FTSE All World Accumulation. It's really one of the most popular ETFs for Belgians, and it satisfies all of the criteria that I mentioned earlier. So VWCE is a fund that tracks the FTSE All World Index. So one of the main benefits is that it's actually broadly diversified. It consists of over 4,000 companies from more than 40 countries. It contains both large and mid-sized companies from developed markets. So we're talking about the US, Germany, UK, Japan, as well as emerging markets such as Brazil, China, or Chile. So an investment in VWCE makes an investment in one big chunk of the world economy. So ETFs are traded on stock exchanges. Famous stock exchanges are the New York Stock Exchange, the NYSE, or the Nasdaq or London Stock Exchange. But for legal and tax reasons, Belgians should invest through a European stock exchange. An example is the Euronext. And so to access a stock exchange, you actually have to go through an intermediate, which is called a broker. So there are several brokers Belgians can actually choose from, each with their own pros and their cons. We actually did a comparison of the most popular ones in another video, which I've linked in the show notes, so do take a look at that. But in this example, I just want to choose Bucks. So Bucks is a relatively new broker, originally from the Netherlands, but it's really popular among young Belgians. Its main attractions are the low fees and the fairly slick mobile app. The first hiccup, though, we encountered was that VWC isn't actually available on Bucks. We did find, though, VWRL with the following ISIN, which is the distributing variant of VWCE. But warning, to pay attention right here. In Belgium, accumulating funds are vastly preferred over distributing funds when investing in stocks. So the main issue of distributing funds is that you have to pay a 30% tax on the dividends that the fund pays out. So accumulating funds directly reinvest the dividends into the funds, so you don't actually have to pay the tax. So find out more about the taxes when investing in Belgium by clicking on the link in the show notes. So if we invest in VWRL, we will have to pay a 30% tax on the dividends. So we actually want to find an accumulating fund that's similar to VWC and is available on Bucks. So in Bucks, you can actually add criteria when you're searching for funds. By using the tag ETF accumulating, we find a fund that matches our requirements. MSCI Core ETF from iShares by BlackRock. It's also known under the ticker symbol EUNL. So this ETF tracks the MSCI World Index. The fund invests in over 1,500 companies from 23 different countries. So it's not quite as diversified as VWC, and most noticeably, it excludes companies from emerging markets such as China, Taiwan, Brazil. But it's a great fund to get exposure to the largest economies in the world. And historically, it's performed great. So if you had invested 10,000 euros in the MSCI World in 1979, you would have 880,000 euros today. That's an average yearly return of 10.9%. So the evolution of 10,000 euros invested from 1979 to 2022, this is the graph from Backtest. So we've chosen our ETF and we're actually ready to buy. The next step is you have to deposit cash on your Bucks account. Note that you can only buy whole units of shares. So at the time of filming this, EUNL was trading at 77 euros and 31 cents per share. The price does move constantly, so check what price it is when you're actually going to purchase. Then you've got to deposit enough money to buy at least one share. So once you're really ready, click that buy button and congrats, you just bought your first ETF share using Bucks. Some considerations though when you're trading on Bucks, which you shouldn't forget, there are actually some issues. Like the first one is obviously the transaction tax, the TOB. So the Belgian state charges a transaction tax for every trade that you make, whether it's to buy or to sell. For EUNL, the tax amounts to 0.12% of the total amount. The majority of Belgian brokers actually pay and they declare the tax for you, but Bucks doesn't. So we put a little guide of how to declare the TOB on their website, put it in the show notes. We highly recommend you follow the steps to avoid any problems with the Belgian taxman. Secondly, the dividend tax. In case you were to buy a distributing fund or an individual stock, you're going to have to pay a 30% tax on the perceived dividends. Bucks, strangely, does not withhold this amount for you, so you're actually going to have to declare and pay it to the tax authorities yourself. Thirdly, they're foreign broker. So what this actually means concretely is that you have to declare your foreign Bucks account to the Belgian National Bank as well as on your yearly tax form. So we put a little guide to you. I put it in the show notes of how to declare your foreign account. There are, of course, a bunch of alternative brokers which offer more cumulative funds and in general do a better job of helping you with taxes. I put another link, again, link number 86 in the show notes, but that just looks at all the different options you have as a Belgian investor if you want to dig deeper. It's really a worthwhile exercise to really do the analysis yourself. And so there are a few different fees when you're investing in an ETF. One of the fees is obviously the TER, that's the total expense ratio of the funds. So fund providers, they charge this fee for managing their funds. They automatically deduct it from the performance of the funds. So you can find the TER by searching through the Key Investor Information Document, also known as the KID, as many brokers do not actually openly list that fee. For example, EUNL costs 0.20% per year, whilst it's 0.22 per year for VWCE. There's a transaction fee, so there is usually obviously a fee for every time you buy and you sell an ETF. This is entirely dependent on the broker. Through Bucks, we did not have to pay a transaction fee, but do remember, if something is free, you got to pay for it somewhere else. Thirdly, obviously the transaction tax, as I mentioned before in the video, this is the tax that you must pay when you buy or sell a financial asset. So the calculation of the tax rate is fairly complex, and it depends on the different characteristics of the particular ETF. Hint number 86, we put another guide in the show notes to take a look at that. And as we've seen, investing in ETFs through a broker is not particularly straightforward. So we understand that it can be daunting, especially for first-time investors and someone who's just getting into the whole sphere. So Curvo was really built to take away all the complexities of investing in index funds. So through Curvo, there's no need to search through thousands of ETFs or scour wikis in order to understand how and why to select a particular fund. So through Curvo, you get to invest in a portfolio tailored to you. So it's based on a questionnaire. We select the mix of funds that correspond to your goals and your appetite for risk. Through Curvo, you can set up a savings plan. So you put your savings on autopilot, you choose an amount, and it will automatically be invested every single month directly from your bank account. Thirdly, all your money is invested. So in contrast with the majority of brokers, Curvo works with fractional shares. What this means concretely is that all your money is put to work. So there's never any cash sitting on your account, not doing anything. Through Curvo, there's obviously no entry or exit fees. So there's no transaction fees. There's no entry or withdrawal or anything like that. So to learn more about how Curvo works, really what we can say is that you can follow all the steps above and invest in your ETF through a broker. However, if you are worried of making a mistake when investing, you don't want to handle the taxes, you essentially don't want to spend time choosing a broker, you don't want to spend time making the trades, you don't actually want to figure out a rebalancing strategy and also executing on it, you don't want fractional shares, and you essentially don't want peace of mind that your investments are kind of taken care of, then seriously, you're welcome to use Curvo. I've talked about the differences between doing your investments yourself and using a broker and investing through an app like Curvo. I've linked that as well in the show notes. But really, to conclude, we've shown you in this video 2 ways of investing in ETFs through Curvo. You can do it through a broker or through the app. But the major downside of investing in ETFs yourself through a broker is about making the right choices. And as we've shown, there are tons of ETFs available. It's super challenging to choose the ones that match you and your goals. Essentially, you must also be careful to not pick the wrong ones where you could actually end up paying high fees, but also a hefty tax bill. You can avoid making these mistakes through an investment app like Curvo, which ultimately sets you up for long-term success. All right, thanks for watching. Click that subscribe button, like, and comment if you have any thoughts about our video. Cheers.